day. Thank you for being here. Thank you for, coming out and talking with us and being who you are with us and having some fun with us. And we're so glad you've joined us. I see you coming on right now. I just want to say today's a special day, isn't it, Scott? We have surprises for them, don't we?
Are you playing Mrs. Claus?
Mm-hmm.
Uh-huh.
Yeah, today we are going to continue our conversation about money. Go ahead and put your name down below. Glad to see you here this morning. But today yesterday we talked about money, and we talked about money not just being dollars, because people don't understand that our cash, if you get a e pluribus unum, maybe I have a buck in my wallet somewhere. There's a dollar. This right here.
That sounded dangerous.
Yes, the master fell. This right here, do you see this dollar? This actually, everybody thinks, I got a dollar in my pocket. Guess what? You have 3 or 4 cents in your pocket.
That's
and most people don't realize that it's only worth 3 or 4 cents. They think this has a lot of value, and they keep trying to make dollars, and they keep trying to make money. Money all around the world is backed by the credibility of your economy. It's backed by the credibility of how you can make things and deliver things around the world. And that kind of means right now that everybody's money is kind of valueless right now. Any kind of currency is valueless. Fiat currency is what we call it. Yes?
Especially if you want to take this into Wells Fargo or any other bank and make a mortgage payment.
Yes.
Because right here it says this note is legal tender for all debts, public and private. But now that one statement isn't seeming to be honored in a way that it might have been just 10 years ago. So there is a push to have cash not be as valuable, as useful, or as available as it would have been in times past. Why would you think that is, Vickie? Why would they want to do that?
I think it's probably just worthless.
Oh, I mean, you think it's worthless rather than maybe a social distancing app. We want to distance you from your cash.
It is that way as well. I mean, they're sucking the money right out of there. It's getting to the point where we're going to end up being a cashless society in the future, a cashless society. So what does that mean for people?
It means we've got to discover, use, implement, and collect another store of value, another unit of exchange. That's ultimately what is being pushed upon us. And if you want to do that with the quickest time frame, then you make what is currently being used valueless, or not a proper store of that value, which is, why, heck, I remember starting with a passbook savings account. Do you remember that thing? You'd take in your money, and as a kid, you'd go to the bank, you'd give them some money. They would make a little entry on your passbook savings, and you saw that balance grow. It wasn't a computer printout. It was literally like a passport.
Yeah.
And the same kind of structure with multiple pages, and your ledger was on your passport. And that was a long, well, I won't say that was a long time ago, but it seems like a long time ago in the way money has evolved and how savings has changed with that.
It's interesting that you talk about these things, because Ray Dalio just did a talk somewhere. He just did an interview, and he was a long interview. It's about an hour, and he did it a couple of days ago, and it posted onto YouTube. And of course, Ray Dalio, I like his principles. He's a great billionaire. I like what he stands for. So I definitely was listening to what he said. And he said, what's interesting is we are walking into a new paradigm. We are walking into a new structure, a new world order. He said there hasn't been that new world order since 1940. And now from 1940 until now, there's going to be a new world order. And what's going to happen during the time that these things, especially if we have a second run of the pandemic, is that the things that we're used to, the tools that we're used to, is debt. And we have it in the form of a credit card. We extend every emergency with debt. And that new world order was like, hey, you know what? this debt is going to shrink, and the availability to having credit is going to shrink as well. And so they want to get rid of the money and use, he said that they have it now. It's all over, where they're going to be using, like in China, where everything's going to be on your phone, and you're just going to go by and scan that QR code and
They're
name
nearly
how
there.
many of you got it. It's the same thing when you go to the grocery store right now and you get in the self-service line and you blip over that QR code, that blip, or it's a different type of code, but at least it charges you for what that is. I mean, they're literally getting rid of any kind of job that has to do with a clerk, so that you can just, Google has that store that they're training right now, where you carry all the stuff in your back, and you can walk out of the store with the stuff in your bag, and it'll ring up everything in your bag as you walk out the store, and you kind of run a tab versus having money. So then what is money, and what are the new kinds of money that are coming up?
Well, that's really the question, is what do we believe we need? And so for me, it's about privacy, and then realizing how much power we give away to the institutions that create the money. If
Yes.
they have the ability to overnight create $1 trillion, $2 trillion, why should we have to work for it? Why should we have to pay taxes
Yeah. Why?
on that? Just print the bloody stuff up, pay the taxes, and we just have this, all-inclusive system where, we get to work for our own good, our own gratification, our own income. But why pay taxes if they can do that? And these are questions that I think are going to really come to the forefront of people's minds, Vickie, as they understand what we're calling modern monetary theory, or MMT, where we just create what we need and consume it as we need it. The risk for that, as we've been talking about, is inflation. Because if we gave everybody all of a sudden $1 million,
Yep.
where's that money going to go? I promise you, there is going to be a race of people to get those Lamborghinis, those Ferraris, those beachfront homes. There will be competition in an overnight fashion to go get those assets and to spend your money ahead of the others who are right behind you. And that's how inflation begins, is all of a sudden everybody's rich because they have $10,000 instead of $1,000 in their bank. And if you've got just $1,000, you're okay to get bread, milk, gasoline, pay your bills. But if there's a 10 grand in there,
you have discretionary spending, big time.
And that's where inflation gets ignited.
Yeah.
So right now what we've had is inflation via quantitative easing in financial assets, in the bonds and in the stock market. And that's why the stock market is at these incredibly high valuations right now, despite an economy that's in the pooper. We still have that money, that free money, going to chase appreciating assets. And it's going to take a little while to break that chain.
That's so interesting what you said, because Wednesday, I track this all the time. Wednesday, the market's down 1,500. Yesterday, it's down 1,800, but this morning it's up 600 points. How did that happen? Do you think a bunch of investors said, I feel safe now, I'll invest? No, I mean, we have the feds coming in and saying, yes, I'm going to buy every bad asset on the market. I'm going to buy all these mortgage-backed securities. I'm going to buy all these mortgage-backed securities. I'm going to buy this. I'm going to buy that. It's like the market is fake right now, and it's being propped up, supported by this quantitative easing, this continuous quantitative easing.
I need even more Apple stock. More Apple stock. I've got to have more Apple stock.
So when you take a look at the valuations of what real assets are right now, it's like the reason the markets fell is because the Fed chairman said, you know what, it's deep. We got deep unemployment. It's not going to be easy. We're not going to get out of this simply. And bam, everybody bailed on the market to the point where they had to come in and buy assets to come in. And they said, we're going to do that. And here's the thing, as long as the feds come up and say, we're going to protect your butt if you stay in the market, we don't have a real market.
Nope.
If somebody says, we don't have a real market. So we don't even know the valuation of those real assets when they get to the point where they have a correction of some sort. But these markets are touching 30,000, which we knew it wouldn't in 2008. We knew it was going to touch 30,000. It was at 27 when it fell, almost 28 when it fell. And now we're looking at what are assets if we don't have, what are they? What kinds of things are money in the future? And what does it mean when Jerome says it's going to be tough? He left the interest rate at 0 to 0.25%,
which is
till
essentially zero.
2022.
Yeah, that's Jerome Powell, the Fed chairman.
Yeah.
Yeah. And so that for me is the value of that asset. If it's not worth paying an interest on, then there's so much easy money out there.
Yes.
That why hold it? Why hold it? Because you're not getting rewarded for taking that risk. And that, for me, is going to be one of the big, huge revaluations, where an asset becomes revalued as we begin that proper market price discovery. Because what if every quarter this country has to borrow $1 trillion?
Yeah.
Either because we don't have an income, so we can't pay taxes, or that we have to cover the expenses of the consumer not being able to pay their taxes. So we borrow more and we borrow more and we borrow more. And all of a sudden, the nation faces a sovereign crisis, because if we realize we can't make even the interest payments on that debt, which
could happen.
It's going to happen. And the way 2020 is going, how far away can it be?
Yeah.
Before that recognition, that realization of reality, just washes across the financial community.
Yeah. There's so many, this is so important. This is such an interesting topic to talk about, because it's like everybody wants to be rich, and they think what exactly is being rich? And because people don't understand, the bar of that has changed. So if you had $1 million right now, $1 million, and we were removed from the currency, reserve currency, that currency would be worth 3 cents. So let's say 3 cents times $1 million. Do you see how your money, your asset is gone just overnight? What is it that wealthy people understand? They understand that money is debt.
When we talk about 3 cents, when the dollar was well, I can't say first because we used the term dollar before, but when the Federal Reserve came onto the scene in 1913, there's a basket of goods that had a certain value. And let's just use gold so we could just talk about one item. Gold will always be gold. Silver will always be silver.
Yes.
They inherently do not change, because the atomic structure of gold or silver, any of these metals, doesn't change across time. It is what it is. So why we can see gold go from, say, $16.50 against an ounce of silver back in the 1913 period versus, say, 1700 now. So it's the dollar. It takes more of those dollars to buy that same thing. And this is what you've been talking about, Vickie, is something that has an inherent value, regardless of its market price. And there is such a difference in realizing, recognizing, and then investing with that knowledge. So I can't imagine. This is Ryan again, isn't it? It's not theory. Digital tracking is real.
Besides, most of what you've been told is a conspiracy theory turned out to be a conspiracy fact, using CT labeled shutdowns, critical thinking, and evaluation.
Yeah, conspiracy theory label. And it works. It works. People like, oh, it's not that. I posted something about this story on the front of my Facebook page last night, and but Bitcoin's only used for child trafficking and drug deals and da 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 da.
Yeah, it's not.
It's not. It's not. That's an illusion that has yet to be shaken. But what that has done is keep people out of the marketplace. So they've colored it with someone's opinion, and then you look at that asset through that color, through that what someone else has said.
Yeah, and it's interesting because we all can see. Of course. I'm sorry, I have to put this up there.
Of course.
Hey, nice to see you, dude. So what I want to say is, in the in the future, it's interesting how when the website came out, everybody understood that having a domain was an asset. It was a digital asset. And
Mhm.
everyone now, literally, you can buy and sell in domain names and make a fortune. And just like here's the name, um, money.com. It's for sale for
Oh,
$30,000 when they originally bought it for $9.99. And we understand that that can be an asset, but oh, Bitcoin, that's not an asset. Yes, that's a digital asset. There's plenty of those kinds of money coming in, and it's not all money that's done on black markets and underneath, drug
under the hood,
sales,
yeah.
and it's none of that. It's like, people launder money in the U.S. They launder a dollar bill in the U.S., and you don't find that any less valuable because they launder money
Yep.
or because the money is drug money. It's still money. It's a still form of money. And as our minds start grasping, the issue with wealth for most people is they don't understand what money is, and thus they don't know what capital preservation is. They just keep thinking money is a dollar bill or $100 bill or 50. That's the tool for exchange of an asset. That's the tool for exchange for wealth. And if you want to maintain your wealth, understanding all the levels of money that there are, it's like, you don't know. If you asked Oprah and she said, you know what, I'll give you $500,000 and you give me your influence, she would say, no way. My influence is worth more than $500,000 or $500 million. If you can get somebody to act just based on the brand of your name and what people understand about you, like she's one of the most trusted people in the world.
Yep.
Just like Tom Hanks was one of the most trusted people in the world. When you have this kind of trust, that is a form of money and all of this stuff has to be earned. The reason money is so different is because it is work. It's hard to understand. It's work. If you take a look and say, I trade time for money, that's the number one way people acquire money. And
Is their
if it's,
time.
yeah,
Yeah.
it's the only one they know. It's the only one they're taught. And if what you just said about Bitcoin but the believability is you have to understand what constitutes wealth or becoming rich. It's like the trade is so important. It's if you don't understand money, how can you use it or gather it or know what it is or know the value of what you're getting?
Because then you're not going to know how to spend your time,
Mhm.
because that's how we aim, or we collect money. And in the old days, we didn't work necessarily for this. This was not the end goal. It was gold and silver, and kings held gold in the treasury, and that backed the operations of the government, while the people exchanged in silver. So you had gold as the monetary base and worth of a country and its ability to go out and collect these resources and bring them back to the national treasury, while silver was the medium of exchange. And we saw some of the biggest booms in the Western United States over the mining of these elements. And that is the work that was done to bring in value to the nation. And if we want to compare that with Bitcoin, we have the equivalent of miners who deploy computers, who deploy what the term is hashing power. So just like a silver miner going out there with his pick and his shovel and his sleuth and the water running through the mountains, they're doing work to collect these little tiny grains of this precious element. The same is true with Bitcoin, as they use their
Mhm.
mining computer rigs to hash, to spike away, to dig away at this algorithm, which is pre-programmed to only emit so much silver, so many grains of Bitcoin or these other altcoins on a precisely timed schedule. And the miner that is at the right place at the right time hits the vein and gets a portion or the strike that is allotted to the miners every 10 minutes, every 1 minute, every 15 minutes. It depends on that hard coded original code. So that is the beauty of Bitcoin, is that we know that there will only ever be 21 million of them. And we're 19
That's right.
million into that release or that emission. Like the mountains of California and the silver, there's only so much there. And so much of that silver came out early. Those who were first
Mhm.
to mine got the greatest reward. And the same is true with these cryptocurrency miners, because they saw the opportunity of those big chunks of silver, those big block rewards coming from the cryptocurrency. So those that are always there first get the greatest reward. But then there's also a carry cost. You've got to collect it and then hold
Mhm.
it. You
Mhm.
either put it in a cryptocurrency wallet,
Long term.
or you take it to the bank, or you
Mhm.
leave it under your mattress. It's both applicable for cryptocurrencies or gold and silver. So there's a lot of analogies, a lot of very similarities. And that's why some of the terminology is nearly, or if not virtually identical, because the process is the same. And I think
And
that there'll be a time, Vic, where we see central banks beginning to buy
yes,
cryptocurrencies
agreed.
as an asset from which they can issue their money by decree, their
Mhm.
fiat. And then, in a way, it'll be money that is backed by something that someone, somewhere, at some point in time had to work for.
I'm going to ask you a question. I want you to answer. First, I want to see this right here. I like this. Family investments are now moving their money into crypto. The largest amount in the billions of Bitcoin are being taken offline and moved into wallets. Why? The transfer of wealth is occurring, and as the masses are worried and wait, the wealthy are moving into future trends quietly and privately behind the scenes in OTC. That is so correct. You know, I remember Grant Cardone one time. I was watching him, and he said the most incredible thing out loud in public, because you know he's Grant Cardone, and he looked at us and he said, wealthy people don't invest in the market. That's not where wealthy people invest. They don't invest their money in the market. They invest their money out somewhere else. The market is for the masses. And I was like, yes, that's right. And it's like when you get to understand what money is, because one of the things that Scott just said, this is the exchange of value. It's the exchange of value. Money is the exchange of value. They have got you believing that money is a piece of paper from the governments, and these are all debt. Money is the exchange of value. For some reason, the fastest exchanger everybody accepts, we don't even look at what's backing it or seeing it or what's making it. It's an illusion that that money is anything less than just a piece of paper.
That's a currency. It's
Yeah,
not
it's
value,
just
it's
a
a currency.
currency.
That's all it is.
So, what is money? Money are the things that hold value long term.
Mhm.
Now, one of the things that,
And and
um,
and and we must
go ahead.
define long term, because
Yeah.
when we work and get paid on a Friday, most of what we have earned over the last 2 weeks is gone before the next 2-week paycheck arrives. So for many people who have not existed in a time of inflation like back in the 70s,
Yes.
or the 30s and the 20s, haven't had an experience with this, to where you see that gallon of gas begin the week at a buck 91 and it ends the week at 245, and by the time you get paid the following 2 weeks is now at 305. So that kind of hyperinflation completely changes how you view the money or the currency you have earned from paycheck to paycheck to
That's right.
paycheck. So there's a different kind of psychology
Mhm.
that consumers, investors, workers use when they're in a deflationary environment versus an inflationary environment. And the cryptocurrencies are largely built for and do best in deflationary areas,
Yeah,
because Bitcoin 10 years ago was still worth pennies.
it
Now it's worth
was.
thousands, thousands.
Hmm.
So what's the dollar change? It's the dollar that's changed in value, not Bitcoin.
That's right. Do you understand that? It's that what we're talking about in the value, it's the value you have to look at. What has changed? Everybody's looking at the dollar and they think Bitcoin is some kind of BS thing that's not even worthy. And I will tell you something. Bitcoin has been a godsend for me. absolutely love its
Me
ease.
too.
I love its use. And I have made a lot of money in it. I mean, a lot of money. And I got to tell you that. Um, it's because of this man right here that I made a lot of money in Bitcoin. We talked about it several years ago. I'm going 5 years, maybe 6 years
Five,
ago,
five.
five,
I
6 years.
began 5 years ago this month.
And
5 years.
so,
And
into that,
at that point, Bitcoin was $260.
I know it's
Today it's
so,
9,000 plus.
yeah. And we
Yeah.
we bought in the early hundies,
Well,
and
and we
that's
did,
why we're smiling right now.
because you just mentioned Ray Dalio
Yeah.
and why he doesn't play in the market, because he can see the trends ahead of time. And if you've got a little pile of depreciating dollars, you go buy a $50 million stake in a company before it hits the market. You take large portions of these things before they're available to those that are playing on Robinhood, on TD Ameritrade, because those are your eventual buyers for your financial asset, the retail market. It's like if the farmer
Yeah.
could create eggs and they cost the farmer, 60 cents a dozen, he has to sell it to a middleman. And then that middleman will sell it to the retailer, who then adds their layer to it. But if the farmer could sell the chickens or the eggs right to the retail market, that's where your profit is, because you've
Hmm.
cut out 2 or 3 middlemen. And that's the beauty of the cryptocurrencies.
Yes. There's more profit on
Yeah.
at the end. I love this. Oh yes, we aren't in the mindset of inflation. We need to reset our approach. Yes, and you have to look at, if you acquire the wrong assets, even if you acquire the asset at the wrong time or in the wrong, we should do a book on this money thing we're talking about.
Ah,
I'm just leaving it right now, how to understand what money is, because they tell you everything that is incorrect for you about what money is. So let me just ask you, you know how people are changed? See, Bitcoin value is increased because the dollar value is decreased. Yes. But the people understand, they love the dollar so much. They love currency so much. They love that digital mark so much. What if you were trained to think like that? What if this entire generation, from generations ago, money was very different? Money was something that you used sometimes, not all the time. It was not currency. So let's go back to the 1700s, and I want to go back to the 1600s. Now, I'm going to talk a little bit about numismatics up here, because what happened was, when we were the colonies, and there was 13 of us, each state had their own money. Each state had their own money. And so you had to get to the point where you were willing to take this state's money, which is why the one currency thing happened. But the one currency thing happened because it happened to be backed by gold and silver. So what happened was, we used coins a lot. We used coins because paper money had no value. Coins at least came out in silver and gold. And you used to have to practice dropping them to hear that sound, to make sure they were pure silver.
Not
People would
kidding.
drop the coin on there, or they would, weigh the coins to make sure that the coin was actually the proper size for a silver coin or a gold coin. This kind of asset building or asset thing, the reason that one currency came along was because that gave us the ability to trade. And here, it's just the ability to trade. We have been conned into thinking that this vacant piece of money is an asset, that this vacant piece of currency is an asset. And we have been taught to think that it's the most powerful asset because it's legal tender. It's legal tender. And this just isn't the dollar. This could be the euro. This could be the pound, the toonie. The toonie has nothing. It's just a coin that's really kind of cool to look at.
But as long as it was issued by a Rothschild central bank.
That's right. There's an interesting fact.
That's the key. The other thing is, we have lived in a society where they'll use this to give you this.
Yeah.
So they're always dangling these to take these. And
Yeah.
so this never really sits in your wallet long enough to grow. And there's no incentive to hold it right now. And that is the entire purpose for
Yeah.
debt-based economies to go. You need to have velocity of money. It has to go from my hands to your hands to another person's hands. It has to keep moving through the system very, very quickly. And that keeps the wheels of our capitalistic society greased well enough that it
Yes.
doesn't seize up. And this is the one thing that this COVID experience has done, is begin to slow down the wheels of the transmission of money through the system. So this is one reason why the Fed can have and spend $1 trillion on debt, but not really affect the economy because it doesn't get down to us. And this gives cover for the modern monetary theory people who want the Fed to just print and give to us, so then the money trickles back up. There are benefits to both sides, but the one thing, Vickie, that you're always harping on is debt. Somebody's got to pay the debt, unless that becomes just something that doesn't exist any longer with a debt jubilee, and that would be a very fun day to see that come about and how we would negotiate
Never know.
a debt
And you know
jubilee.
what's interesting is I know that Robert Kiyosaki is a big proponent for a certain type of debt. He loves debt. He loves it.
It served them
But
well.
he turns that debt into an asset. Like he takes that debt, which is valueless, and turns it
Mhm.
into an apartment complex or a really expensive piece of real estate or a business investment, something that can churn.
Yeah.
What we do is we take on debt and we take it for pleasures. We don't take it for
We
turning
take it
it
for
into an
this.
asset. We're like, hi, I got a $10,000 credit card. We can go to Disney World this year. We'll take all the kids and all the family and we'll just have this week long and we'll stay at this really expensive resort. And bam, $10,000 is spent and there's nothing coming back from it but a memory. This was a great memory. There's no investment inside of where you can capitalize a new asset, a new form of money, a new form of wealth.
And that's key to Visa's
Mhm.
advertising, is
Yeah.
what was that expensive vacation worth? Well, they're
Mhm.
telling you that it was priceless.
Yes, that's right.
Priceless.
And so we keep going into debt.
Yeah. And willingly do so. We sign on the
Yes.
card. We accept that to use those cards, that the interest rate is at a minimum 12, 13, 14%, more in the mid range, 17, 18, 19%. And for those that are just desperate to have it, you're 20 plus percent. And
Yep.
so those greatest interest rates are charged against those who can least afford to pay it. So it is a very predatory system, very predatory.
It is. And that's the point. We have been trained to live in the masses of this predatory system. We have not learned what true money is, the true value of money, and that I want to say this to the wholehearted right here. I really want to say this. If you would have taken that $10,000 vacation and put it in Bitcoin 5 years ago, just Bitcoin 5 years ago, you'd be completely debt free. Your house would be paid for.
If you can control yourself, because then we're back to what do you do with $1 million?
Yeah.
Because all of a sudden when there are these windfalls, then we tend to throw our discernment, our discretion, and our self-restraint out the window because it's such a newfound wealth. And as you have said, there is a difference in how old money behaves versus new money.
Yes.
There's a not even generational, it's just a complete psychological
It's
difference.
interesting what you said because I just got to thinking when you said that the masses purchase experiences with debt, and the wealthy purchase assets with debt.
Yep. Because then
That's the difference.
yeah, where do those assets then go? They either
Yes.
return money, they earn money back for that investment. There's an ROI with every
Mhm.
dollar you spend.
Yeah.
Basic, 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 basic. And then they're thinking about the grandkids. They're thinking about their legacy. They're thinking about what can that $1 million do for me long term rather than I get a car.
This is so interesting that you say this because I remember somebody told me once that I would never be rich if I didn't have a goal for something really big like a plane or a house. And I don't have that. The thing for me that is the number one thing is freedom.
Mhm.
I have freedom. So every morning when I get up and I decide that I want to be on this show and do this show, I'm not dependent on this show. I do this show because I am free to do so. And that's the number one thing. And so for me, those things and stuff become burdensome. And so I don't want apartment buildings. That's time consuming. I don't want those kinds of things that are going to be time consuming. I don't want that 23,000 square foot mansion. What for? I
You
mean,
can
it
pay
just
taxes
doesn't.
on it. Come on, Vickie. You got to
I
pay
know. So you
taxes
can
on
pay
that.
taxes on it.
Yeah.
So it's one of the first things that helped me understand wealth was when we downsized. And when we downsized, uh, my spouse and I, when we downsized, I think when we first met, we had like 3 homes and a condo or something. And so we had, the 5,000 square foot home, then the other home, and we had a home over there, and then a condo over here. And I looked at the monthly, and I was like, we're spending about $12,000 to $15,000 a month on mortgages. That,
Is
and just
insane.
that disturbed me.
Mhm.
Just that, I was like, oh my gosh, we are paying that much. How many houses can you really live in at one time? You can have and own 5 houses, but you can only live in them one at a
One.
time.
Yeah.
So my Robin introduced me to minimalism, and the thing that I was doing was buying a car, buying a car, buying a car, and buying a car over and over again. And she was like, every time you buy a car, you hurt the earth. And we had this long discussion, and I'm not kidding you when I say this. She brought out a sleeping bag that she had from 1986, and she's like, do you see this? It still works. It's still good. It's been everywhere with me. It's been around the world. She still has it. I'm not kidding. But what we think we need, what we think we want, if we just downsized our experiences, we would have enough money just in that one pocket to
Yeah.
invest in cryptos right now and have assets that would be building your freedom. The key thing is it builds your freedom. And so cryptos, I believe, I don't know what you believe, but I believe they are going to be our future monetary system.
Because if the banks struggle, if the banks end up not being able to recoup their debt from all of the loans that they've made to businesses, to governments, to so forth and so on, I think we're going to need it. I know, we're going to need a medium of exchange that is global, so that
Yes.
we can still have
Yes.
global commerce, irrespective of the
Without
local
the fees
currencies
and
of exchange.
exchanges.
Yeah,
Yes.
exactly. And so that if Target needs to buy 10,000 pairs of shirts from a factory in Vietnam, that they can then
That's
issue
right.
that currency to, that's there in 20 minutes or less. Okay, there's
Yes.
2 confirmations. The money's there. Let's ship. And then,
Yes.
it boom, 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 boom. And then on the blockchain, you can watch the progress of that asset, that hard asset, work its way from Thailand to the shipper and then across the boat, and it lands in Long Beach, and then it is distributed into their own network. So,
Mhm.
and the other thing that just gives me all kind of excited is the ability to develop an immutable blockchain for the Pentagon. So we don't have the defense secretaries in news conferences saying, I don't know how it
Wow,
happened,
this.
but we've lost $2 trillion, and don't blame me for it, but I'm sorry, guys, the money's gone. No, that it demands accountability, and there's visibility as to where every single one of these
Yes.
transactions went, to who, when it happened.
And that
That
is going to be a
gets
biggie.
me excited. Yeah,
That's
it
right.
is.
It does. So
So
I'm going
then
to talk about this
yeah,
because I don't think is this Ryan? Ryan, is this you? Bitcoin seems complex. I'd like to learn more. That's interesting. It's not complex
it's
because
easy.
I can do it. And if I can do it, anybody can do it. But I want to say this, Bitcoin is it's not complex. It's
Just new.
unfamiliar.
Yep.
It's just new. And the way it's being rolled out right now, if you even just went to YouTube and pulled up a couple of, just put Bitcoin for beginners. Now, I started off with Bitcoin for Dummies. That's out there. And that's an easy read that'll help you understand what Bitcoin is. And it's probably been updated. But once you understand the value and the power of cryptocurrencies in general, you are going to be hooked because they are the ultimate freedom. They are the part of society where you can use all of the value that you are. And I want to say this, the number one value you have is you. It's as smart as you are, both emotionally smart and what you've knowledge, these two together, your spiritual consciousness, your awareness, you are your greatest asset because you will either call opportunities to you where people will seek you out or not based on your growth of value in that area. So to me, the first value that I grew, you have to grow yourself. And that's a continuous learning. It's like the Dow Jones. You want it to continue growing. It's like Bitcoin. You want it to continue growing. Guess what? You are your own exchange as well. And every time that you continue growing the value of you, you become wealthier, full stop. And that means we have to not get stuck in labeling ourselves, like labeling ourselves as I'm an artist, therefore I'm going to be starving, or I am, I'm an engineer and that's all I am. You are so much more than an artist or an engineer. And just the same way, the more you value or understand the value of you, the more you will understand the value of money because you are your form of money. And you'll either command a big price or you'll command no price at all. It's like the whole thing is that gamut there. And when we understand what value is, because you deliver it, because you are it, you are your first source of value. And trading time for money is like insulting your value. That's just me. I know that there's other people that's good for, but that's just me. Say what you.
And so you want to spend your time on something of value, not something that is disposable. And that got me excited about Bitcoin is because I knew in 2005 and even today that I am buying something that will maintain its value. And the primary reason I got into cryptocurrencies was because through the 2007, 8, and 9 great financial recession or crisis, gold and silver did not perform as I expected them to. And that left me slightly disillusioned about these incredible assets. However, because the system knows they are indicators of stress in their monetary system, that the people want to go into it, and those prices were hard. Well, let's just say they were hard to break free, or difficult to break free, or they didn't break free at all from the manipulation of the banking system, because they know that is their primary asset. The other thing for the person that just commented about Bitcoin is the difference between a pen and a pencil. Bitcoin transactions happen in ink. They're irreversible. Unlike a pencil, where if there's money going off the books, you can erase that ledger
You
and
can
you can
cook the
write
books.
something else. So everything looks copacetic. In Bitcoin, it happens in ink and is immutable, and that transaction to who, how much, and when is forever written on the blockchain. That's why it brings accountability to both the user and the receiver. And that's why I am excited to see it eventually applied to government, so we can bring some accountability back to that spending.
Let's talk a little bit, and I want to wrap up today with this. I want to talk a little bit about the difference between Bitcoin and altcoins.
Yep.
And
Altcoins is simply a short term for alternative coins. So you've got Bitcoin, the granddaddy, the very first one out of the gate. The code was developed between 2000, well, who knows how far back, because there are papers that have been published about digital currency and a digital kind of exchange that go back literally many years, 2 decades at least. The concept has been there. But a pseudonym of a guy, Satoshi Nakamoto, was the one to at least perfect the code. And it was first published on some cryptographic bulletin boards. So it was shared and it had commented, working back and forth. There were a couple of people that initially worked with this still yet mysterious guy, although numerous people have come forward and claimed that they are him, but haven't
Yes,
been able to prove it
that's
perfectly.
right.
And they have in their wallet because they were the first miners to go and mine. So they have a stash of these now very valuable coins.
Mhm.
So where were we going with this? What was the
We're
question?
just I want
What
to
have I
know a
got?
little bit more about altcoins
Oh,
because
altcoins, altcoins.
I
So
think
when you
there's some powerful altcoins as
yeah,
well.
once you see that something works, it's imitated, it's duplicated because that others say, I can do better. Chevy shows up on the scene or GM shows up on the scene after the Model T has been, is out there running and somebody else says, I can do that better or I can improve here, here, here. And that's the beauty of evolution. So there are coins that see, part of the issue with Bitcoin is people believe it's private, and it is and it isn't. If they don't know your
Mhm.
address, which is 31 characters long, it looks like this random thing that nobody could ever figure out or cipher that it belongs to you because only you have the key, then yes, it is. It is private, and nobody will know that's you. However, because it has been integrated into the regular financial system where we have cash dollars, fiat dollars now going in, we have assigned our names and our social security numbers and our addresses to an address. So now there is a way to look back and begin to decipher the activity, and there are firms that are dedicated
Yeah.
specifically to figuring out who is using what and when and where and who it's tied to. So there are alternative coins, altcoins that are now very, very private. And this is why in the beginning we thought Bitcoin would be private, but we've had to hide
Yeah.
transactions, how much, the when and the where, and the ZK Snarch protocol or the zero knowledge protocol is now a very powerful one. So we've got some other coins using that ZK Snarch protocol that it literally guarantees privacy. Others are, oh my goodness, the Ethereum protocol. And so many projects built upon Ethereum. Komodo's another one where you can come in
Komodo,
and literally,
yeah.
yeah, roll out your own blockchain in 20 minutes, develop the
Yeah.
protocols, and it uses Komodo's what they call delayed proof of work. So every 10 minutes or every minute of Komodo's work, boom, it gets written back to Bitcoin and then encoded in Bitcoin. So you can't what they call double spend. So I send a half a Bitcoin to Vickie, and then immediately I send another half a Bitcoin to say someone else. So it blocks the ability to what they say double spend. It's like if you try to buy, you've got $200 in your debit account, and
That's
you try
right.
to spend that twice before the ledger at the bank reconciles that at the end of the day. So altcoins are something that again trade against the dollar, but they also trade against Bitcoin. And
Yep.
that is where in the past 5 years that I've had success is trading and investing in those altcoins because they move against Bitcoin. Because if your altcoin doubles in value as compared to Bitcoin, and Bitcoin didn't change in value, then you've doubled
Yeah.
your money,
Yeah.
very, very quickly. So altcoins are something that takes a little while longer to understand and get into, and obviously don't spend any more than you can say afford to lose. But as you become more comfortable with the space, the functionality, the good projects that have good developers and they're alive, then of course you'll take more risk. That's just kind of how it is. It's just
Yep.
how it is. Look for
And
privacies with 100% crypto. I'm sure Don could throw up one or two of those
yep.
that he would
Look at
probably like to
privacy,
recommend.
100% fully shield pools. That is what cash is, except cryptos are limited in their production and cannot be printed at a whim. And this gives them value.
Yep.
And I think it's so important to have this conversation about there is money. Money is not just one thing, it's not just fiat currency. And there's a reason they call it fiat currency. And we're not talking M1, M2, that kind of money. That's still fiat currency. There are other forms of money out there. And when you understand how those assets build, so I want to share something my dad told me a long time ago, and it's in this book right here. Smart Cash Flow Secrets. You guys, if you want to know about
Mhm.
money and how to build that, this book, it's God, it's $7. It's like the best thing you can get. Just go to Amazon and get one and read that. And so what happens is my dad said, never pay attention to your net worth. That's just crap. Pay attention to your cash flows. How many assets do you actually have? Because network and net worth is, sometimes a disguise. You can have this big accounts receivable that you haven't collected on, that they value in there, that some people are not going to pay. You don't actually know what the value of this is until the transaction has been completed. So when it comes into understanding money and assets, we are going to spend a little bit of time today. We're going to continue this Bitcoin conversation and money conversation for quite a while, because the future is going to be, right now, the future is going to be a lot about what assets you buy. And they've trained us to use debt to buy experiences. So at the end, there's no asset. You have no money then. You have nothing left. If you go out to dinner and you've had a good meal, then all it does is create excrement in the morning. You have no asset. You have no money. So how do we work around these new incoming New World Order pieces?
And it keeps us in slavery. We have to go to work to sustain
That's right.
and to make those debt payments. So there's absolutely an aspect of slavery, and that's why the system has been developed the way it is. So we remain compliant and willing to work and not necessarily improve ourselves or find that calling inside which would be most productive. We have a job that pays well. We get weekends off, 2, 3, 4 weeks a year if we're fortunate, and we're content. And we're not striving to be the best you can be because you're content. You're comfortable to a point, but that doesn't mean there isn't something inside of you that's just screaming to do something else.
So, how would somebody choose what altcoin to invest in? What are the things to investigate? Such a good question.
That's a loaded one.
It is. And so here's the thing. We're going to take that question with us into our next conversation about money.
Yep.
How is it it's like choosing assets, right?
Yeah.
Okay.
What's of value to you? What would you want out of your money? More of it? Privacy? Usability? So you've got to decide what you would like to do with it. And if it's just something you want to hold on to, like a home for 2, 3, 4, 5 years, then it's a little bit different. There are people who are aggressively day trading these, and those folks add and provide liquidity to the markets. But you just familiarize yourself with the menu of options that these altcoins are programmed to do. And then you begin to hunker down and research the ones you would like. But
Absolutely.
then you have to have Bitcoin already in your wallet before you can go shopping. So
That's
getting
right.
Bitcoin is
We're going to
first.
see that. We are going to see that. So we're going to tackle this as a subject for the next one. How do you investigate? How do you know? I have to do this. I've always loved pirate. Me too. Since I was a child, for pirates were actually privateers.
Privateers.
And lived by that. What is the pirates always say? Arr. That means freedom. That's right. And he's saying ARRR is an alternative coin. It's an altcoin that we have that I really like. I'm very heavily invested in R, and that's the sign for that. But I want to just say, we're going to continue to talk about money, because creating wealth, the how you create wealth, means retraining your brain and rethinking about what money is, and etc. Scott, as always, you're the bomb at this. I love working with you on Fridays. You guys have a really fabulous day. But remember, Scott and I are looking at you. We'll see you this weekend.
Right there.
We're looking. That's right. All right, you guys. Peace out. Love you all. Mwah.